Hello, and thank you for joining us. This is going to be a bit of an educational video on how to use ByteTrend. This is the trend following system we've built for the top 100 crypto assets. Quite simply, it's all about identifying leadership in the market, which is a very powerful tool. I mean, to take it back to the stock market, the momentum effect of owning leadership over the long term is academically proven to add about 4.5% per annum. It can be volatile, of course, but it locks you onto the winners. In recent years, it got you onto the FANGs, about 10 years ago, and barely got you off them until fairly recently. Anyway, I've got a friend to join me today who's the entertaining Dominic Frisby. And
Hi, Charlie.
He loves the chart and he loves crypto. He wrote one of the first books on Bitcoin and many other fine books, of which you can see one in the background, Daylight Robbery. Welcome, Dominic.
Hi, Charlie. How are you doing? There's the poster of the book. Thank you very much for having me, and looking forward to learning about some of your ByteTree wizardry.
Well, let's crack on. We're on ByteTree.com, and all I'm going to do now is open the terminal, and hey presto, we should see a whole loads of data pop up. And there it is. And on the top left, we've got ByteTrend. Now we've got crypto, we've got equity ETFs. Today we're going to be talking about crypto. Okay. So the first thing I can do is click on scores. Now, Dominic, I'm just going to show you the basis of the whole thing and the sort of point of why we do this. And so we're going to start in US dollars, because you can measure a chart like Bitcoin in many different ways, pounds, dollars, but you can also measure it, relative to the S&P, relative to gold, all of these sorts of things. So we're going to start with US dollars and see what it looks like.
Which is the default.
That's the default. I mean, it's not the most interesting way to look at things, but it does seem to be the
it's how we all think.
It's how we all think. Okay, so I'm going to turn off all this gubbins in the background and rebuild the chart. Okay, so that first thing we've got there, Dominic, is the price of Bitcoin in US dollars. A bit disappointing the last year, isn't it?
It has been disappointing, but it's doing what Bitcoin has always done, Charlie. As I'm sure you know, it has these bonanza bull markets for 6 months or a year, then it has a bonanza crash for 6 months or a year, and then it goes sideways for a year or two, and then it goes off on a bonanza bull market again. I've identified the 4 phases, and I would say we're somewhere in between. In the quiet accumulation phase is where we are at the moment.
And I get to that same point through another thing, which is looking at my version of Plan B's model, which I don't have a Plan B model because I don't think the stock to flow is particularly interesting. It's slightly interesting, but not very. And that is that there's a pooled halving. So in the 18 months before halving, which is forecast for April 24, that's when the lows normally come in. So it's any minute now, really. One would hope that the recent low is the low.
Yeah, and on that subject, Bitcoin. I would say to people, just buy some Bitcoin and have it and hold it in the same way that you have gold, and don't necessarily try to time the market. But I also have said that, ever since this correction phase started, I thought it would go back at some point and touch $20,000 because that's the old low, and that's the old high. And what it always seems to do when it goes on its bonanza runs is first it has to get to the old high and break through it. Then once it's broken through the old high, that's when it goes bananas. And then when the correction comes, it always seems to go back to what the old high was. So $20,000 was obviously the 2016 high. It broke through $20,000, went whoosh all the way to $65,000, $70,000, and then came back to, actually, I think it was $17,000 or $18,000. So even though it wasn't exactly, it was roughly the point of the old high that it came back to. And maybe it'll give that a retest, or maybe it's kissed it goodbye already. I don't know, but that's what I think seems to be going on.
Brilliant. What we're going to do is show you an unbiased way to read a chart, and it's not the chart that's that exciting, and it's not the overlay that I'm going to put on that's very exciting. It's a process that can be repeated across many assets, and that is the point of this exercise. We're going to start with a 280-day moving average. Just to confuse you, why is it 280 days? You know the answer, don't you?
Well, I was, in fact, it was one of the questions I was going to ask you, and I often use 255-day or 252-day moving average, because effectively it's the 1 year moving average. There are 250 trading days in a year, but Bitcoin trades 362 days a year. So why the 280? Why 280?
Oh yes, Bitcoin has 3 days off every year, doesn't it?
Well, no, it's I can't count how many days there are in a year.
Yeah, it always shuts for Christmas, I thought. Yeah. Okay, so here we've got the 280-day moving average, which is a 200-day moving average in weekend language in 24.
Okay, fine.
Yeah. So it's a very simple adjustment. And what I'm going to do,
if you had the 365-day moving average, it would be pretty similar to the 280.
do you know, and the point here is I don't really care. What I'm trying to get is some sort of medium-term measure. Yeah.
Okay.
And when it's consistently applied across the universe, then that's what matters. So it wouldn't matter if you added 50 days or subtracted 50 days, particularly.
Okay.
So
I like to just as a sidetrack. Sorry, Charlie. I always like 233 because it's a Fibonacci number.
Good. I do like that sort of thinking. That's fabulous.
Yeah.
So here's the price of Bitcoin at 20 something thousand, 22,000, and it's below the 200-day moving average.
Yeah.
Okay. The second thing about that is the slope of the 200-day moving average, sorry, 280 is negative.
Yep.
So those are two negative points. We've got a price below a moving average, and we've got a negative sloping moving average.
Yep.
I'm now going to get rid of that and put the 42 on.
Okay.
Now we've
42 got presumably is what? What is 42?
30 in old world, TradFi 30,
okay.
Crypto 42. So we'll zoom in on that one because we can't quite see what's going on. So there's 1 month. And we can
actually, Charlie, just zoom out a sec. Now it's at that 30-day, that 42-day moving average is actually really useful because look how many times Bitcoin's bounced off it. It's just a useful little average. Anyway, go into close up, and I see we're above it now, which is a good sign.
So we're above it, and the 30-day, 42-day is positively sloping.
Yep.
So I'm now going to give 1 point for each of those. So
okay, so we're in a long-term downtrend, but in an intermediate-term uptrend.
Had we been in a long-term uptrend and above the 200-day moving average, then we'd have got another 2 points.
Gotcha.
Right? There we go. We're adding points here. And the useful bit is not that magic so much as the ability to screen it across a wide universe. Right, we've now got a 20-day maximum line. So the way that works, if you go back to March, the price went up and that pulled the max line up. And then every 20 days, you go back and say, what was the highest price? And that's what it is. So the max line was falling from April, and it had its first uptick in July, mid-July. You can see that little
nice. Yep.
Yep. We're now going to add the min line, same principle, but a negative bias.
Yeah.
And what we're measuring,
I was never familiar with that indicator. I love it.
It's brilliant. Yeah. And it's sort of fast. That's what I like about it. So we've got some slow indicators and we've got some fast indicators working together.
Yeah.
And the point here is that we were going to measure the last touch. And the last touch was the max line. It hasn't touched the min line since about the 10th of July. Yeah.
Okay.
And so the last touch was max. So we're now in max mode. And that means we get 1 point. All right.
Okay. So you want it to be, if you're a bull, you want it to be on the max, not on the min.
Yeah, of course. If you want to be a bear, the other way around. Now I'm going to hit score. And so that score is measuring the strength of the trend.
Yeah.
Okay. So in the end of March, we were briefly a 5-star trend. So that meant it was above its moving averages and both were positively sloping and we had touched a max.
Yep.
And then in May, we were in the opposite. We had touched a min, we were below moving averages and the trends were falling. The same was true in June. We're now rebuilding. So we're on a trend score of 3 out of 5. And when the 200-day moving average turns, then we can get another point and when it goes above. So you need to get 38K Bitcoin to get a 4-star, and you need to be there for 6 months for the moving average to turn before you get a 5-star. It's quite hard to get 5 stars.
Well, I'll say it's a mature trend by the time you get to 5 stars.
Well, Bitcoin spent quite a lot of its life at 5 stars. Let's go back and have a look at it. So now I'm going to move into a 5-year chart, Dominic, because you said that, by the time it's a 5, it's all over. Well, I mean, look at that 2017, that solid 5, 10 times your money in that period there. This solid period of 5, which is 4 times your money. This is it goes up the scores and you get the first 5 at about 10K in 2020. And then, all of that rally was on 5. All the big money was made. And I'm not suggesting you sell a 4 or anything, but it's, it's wake up to 5. It's like, hello, so-and-so is at a 5. This is now interesting. We call this fat tails. This is how CTAs work. You know, they say, show me a trend. And so basically a 0 trend means you're going down, a 5 trend means you're going up. And all the other numbers, 1, 2, 3, 4, are kind of some kind of noisy neutral. And so that's really the basis here. Okay, do you get ByteTrend?
I get it.
You get it. Thank you. All right.
It's a very simple, logical. When I say logical, I mean sensible as well as logical, but it's a simple, sensible trend following system
that's repeatable across any asset.
Yes.
Right? So we can go to the pub now. We don't even need to pull out our phone and look at charts, and we could talk about you know, some coin going from a 2 to a 3. And know what that means in your mind without actually having to look at pictures.
Yeah, and it doesn't matter what the coin or the company does. All that matters is whether it's going up or going down.
Fine. Absolutely right. Now, what we're going to do is we're going to look at Ethereum. Okay, we're going to go to Ethereum. And it's the same principle. We'll leave all the lines on this time. Because the default is they all come with the lines. You know, in April there was a bit of a false bull market in April that didn't really go very far. But you know, we've had our bear patch, and things are starting to recover a bit like a bit like we saw in Bitcoin. Now, that brings me to the question: what would I rather own, Bitcoin or ETH? And the answer is to look at ETH in Bitcoin, which is what we're doing now. And so we've now got a very different perspective on the space. You know, I can go to CoinMarketCap or Crypto Compare or CoinGecko and get all these numbers all over the place. But what this is doing is framing the space and being able to sort out the winners from the losers. Yeah. So I'm now doing a scoring system of ETH in Bitcoin. So I now know that ETH is outperforming Bitcoin, not just because the price went up, but because we've got a 5-star trend, and that's been growing.
I'll say.
Yeah, so we're above our moving averages. The moving averages are upward sloping. So if you're in doubt, let's zoom in, and you can see that's not.
And it's right on the buy point on the 280-day moving average. It's right on the, you know, sitting right on it. That's a really bullish chart.
Yeah, so it's a 5-star trend in Bitcoin. So if you like Bitcoin, so what we do at ByteTree, we've got a thing called Bytefolio. I'm not going to go into that today, but essentially we are looking at all the best trends in the market, then doing analytical research with our guys, Ali and Sarand, who are fantastic, and they write it up. And so what we're doing is saying there's a trend, and then we're asking the question, is it any good, by doing thorough research, and then putting in the portfolio if we like it. But anyway, so this is the very simple. Ethereum in Bitcoin. We've already done dollars, and then finally I'm going to look at the ByteTree crypto average. And this just basically this is something that's uninvestable as a concept, but it basically shows you the average top 100 crypto daily move. And so in a strong bull market, this can be very, very good. It's very, very hard to beat, and in a bear market, it's very, very easy to beat because you know the average crypto is truly diabolical in a bear market, and only Bitcoin holds up in some sort of meaningful relative way, as we've saw in Q2.
But that chart was telling me that I want to be owning Ethereum one ahead of Bitcoin, but Ethereum ahead of most other top 100 coins. Yeah.
And we'll get to that. We're going to show you the breadth chart in a minute. But looking at Ethereum relative to the ByteTree crypto average, you can see that it was extremely powerful in this sort of late 17 stage. But then, and it was pretty good in sort of 2020, 21, that era.
Okay, looking at 2016, 2017, you can see that purple line was rising, and you can see just how far Ethereum, the green line, got above its long-term moving averages. And then you see basically from maybe 2019 to now, mid 2019 to now, that the purple line is pretty flat. And, you know, that's really, you know, it's when long-term moving averages are flat and all the moving averages coil that you get really big moves off. So that makes me quite bullish about Ethereum, I've got to say, Charlie.
Yeah, well, it's a good chart, isn't it? It is a good chart. So we are now going to move into, actually, before we move into, I do want to show you Monero, because I know you're a bit of a fan, because it was in your book, wasn't it?
Well, I like the principle of the privacy coins, because they're sort of what Bitcoin was intended to be, and in this surveillance state world, I like that. But also because Monero is so extensively used on the dark net, I always thought that gave it a sort of special status, because black markets often adopt new technologies before mainstream markets and make them work on a practical day-to-day basis. They don't have deep pools of venture capital or debt that they can fall back on. So if something's working in the black market, that's usually a good sign that it's going to work in the the mainstream markets as well. I'm not endorsing, by the way, what goes on in black markets, but given that Monero is a privacy coin, it's found extensive use in the black markets. And so, yeah, it's always, I don't actually own any Monero, but I'm always interested to follow it and see how it goes on, because I think I once heard a talk by a Monero maximalist, and I was quite persuaded by the arguments, and they were very much, anti-surveillance state.
Yeah, there's nothing wrong with privacy, is there? Now, no. This is Monero measured in Ethereum, because you said already you like Ethereum. So we're now saying, okay, well, how does Monero look against Ethereum? And it's pretty neutral. So the sort of the trend is what's been outperforming this last few months. But there's also this idea that proof of work coins do start to follow a different trajectory to proof of stake.
Yeah, I'm surprised, Charlie, that's only got 2 stars, because
this is in Ethereum.
Yeah, no, I know, but I mean, I whenever I look at your chart, I seem to be taken by the purple line, the 280-day moving average, which looks good, but I get that the rest of it is not quite so good.
So that's Monero in Bitcoin now.
Ah, yeah. Well, there you go.
Yeah. So we like that a lot,
and
that made it to Bytefolio, which was quite cool. So
Bytefolio is what, the top 10 coins or something?
Sort of thing. We don't limit ourselves to a number, but basically the aim is to outperform Bitcoin. So we write a thing called Atomic, which is basically all about Bitcoin. And then to say for those people who are interested in outperforming Bitcoin, you can do it with leverage, or you can do it with timing, or you can do it with stock selection. And so we're saying, well, what are the runners up? I think that we're in my head, if I'm going to be sitting here at ByteTree for years to come, I want to have overseen correctly identifying the long-term leadership.
So how does one buy Bytefolio?
Oh, it's a model portfolio. You go and buy the coins yourself. But
okay.
It's a research publication. So this is breadth. So what we're doing here, this is my rather pretty chart. I love this chart. No one understands it. So that's why I'm going to explain it to you. And then hopefully,
I was going to say it looks like an impressionist painting of a flood meeting a fire.
So you know what a breadth chart is, don't you, Dominic?
No, explain it to me.
A breadth chart. Come on. So you've got the S&P 500, and it's the percent of companies above the 200-day moving average, above the 30-day moving average, this kind of thing. Yeah.
Okay.
And what we've got here, we're going back to 2018 in Bitcoin, and we're now in dollars. All right. And we are measuring the number of trends. So all the top 100 cryptos, we're looking at all the trends. This is not Bitcoin. This is all of the things. And so when there's lots of blue, like in May 20 to May 21, that means there were lots and lots of 5-star trends, dark blue. And then the next blue is 4-star trends, 3-star, 2-star, 1-star, 0-star. So 0-star are downtrends. So in a bull market, you see very few downtrends in that period I highlighted. But you get back to 2018 and this year, lots of red skies. We call them blue seas and red skies. So red skies in dollars means the dollar's been very strong against crypto, which has been very weak. Yeah.
Yep, I'm totally with you. And interesting at the moment, we've got light blue skies.
We've got red. So the red skies have retreated, which is good, but we're yet to see strong blue trends.
Yeah.
Yeah. So we've got
which confirms my frustrating consolidation thesis and quiet accumulation rather than out and out bull market or bear market.
Right. And so I'm going to go back a stage because you just made a good point. And so in dollar terms, and this is all about the screening. Yeah. So the moment they were a moment ago sorted by market cap, but they're now sorted by trend. So there's one 5-star trend in crypto, and that's Chronotech. That would be something dodgy, but don't worry about that.
Yeah, I have no idea what it is.
Sands 4-star, Ethereum Classic, Lido Dow, these sort of things are 4-star. Bitcoin's 3, Ethereum, Binance 3. Yeah.
Oh, I'm pleased about Decentraland. My daughter's got some Decentraland.
And then I'll flick it the other way, and these are all the 0-stars. These are the things that are not doing well.
Helium.
Yeah.
Helium. I have a helium stock, that produces the actual gas, and so that's an unfortunate ticker that the Conscious Value Network has.
It's a very good one, isn't it?
But the anyway, I follow Helium, and the so I have a Google Helium news update, and it's forever sending me news about the Helium coin that I know nothing about. Excuse me,
That's your agent.
it is actually my agent, and I'm calling him back. He's telling me not to mention Helium. Anyway, right.
So there we go. We're the breadth chart. So we just added up all the scores that we just seen, and there were lots and lots of downtrends in June, and that's disappearing. And now we've got a more neutral environment, which is the light blue. And
Yeah.
if dark blue comes through, then that's bull market time.
Mm-hmm.
It's a very nice way of measuring the overall scene. Now I'm going to do the same thing in Bitcoin. Okay.
Yeah.
And so the last one, lots of red meant that the crypto space was weak in dollars. In other words, the dollar was strong. Yeah, if it's red, yeah, dollar was strong, crypto was weak. Now we're measuring in Bitcoin. So lots of red now means that the Bitcoin is strong and crypto is weak.
Gotcha.
Yeah. So what we're seeing here is lots and lots of red for Bitcoin in June meant that Bitcoin was heavily outperforming the space because there are very few 5-star trends in Bitcoin. It's quite hard. You've got to get your head around this one.
Yeah. No, I got it. I'm with you.
Well, you're a bright guy. That's why you're on the show. So the fact that Bitcoin has seen the red disappear just means that it's becoming easier to beat. The crypto winter has peaked, basically. It might be another storm coming. I don't know. But
yeah.
But that's as bad as it gets. Everyone's the flight to quality is obviously the dollar, but beyond that, it's Bitcoin within the space.
I met with Pete McCormack the other day, and we were talking about Bitcoin maximalism, and I was just basically saying shitcoins in a bull market and Bitcoins in a bear market, and there's that chart would demonstrate that.
Absolutely. So it's from an analytical point of view. Do I need to engage in altcoins or not? You could just follow that breadth chart and then decide whether you want to play or not. Now this is Ethereum. Okay, so the whole thing in ETH, the whole space measured in ETH, and the fact that that there's a complete lack of trends and there's lots of red sky is telling you that ETH's really strong. So crypto is weak in ETH. Yeah.
Yeah.
They're quite fun toys, aren't they? To sort of
it's great. It's great. And so it's I guess the fundamental reason why Ethereum's doing well, I mean, never mind all the sort of multiple uses that it has, it's that this Ethereum 2.0 or whatever this new development is that's forever been about to happen.
Yeah, so we've got the whole, the merge in September, haven't we? And it's going to go to proof of stake, and so then it becomes ESG friendly. So then, mainstream investors start wanting to put it in portfolios.
I'm getting, funnily enough, I'm getting more people asking me how to buy Ethereum than how to buy Bitcoin at the minute.
Yeah.
Why are there no Ethereum ETFs? Yada yada. There probably are, but
there are. They're just banned in Britain.
Yeah. Okay. Well.
Yeah.
Financial center of the world, Charlie.
Is that right? Is that right? Luckily we have the Bank of England in charge.
Can I just have a quick rant? Do you mind if I have a quick rant?
I was expecting it at some point.
Well, you have, on the one hand, you had Rishi Sunak, and when he was Chancellor in the Treasury, going, he wants to make Britain at the center of new technology, and Bitcoin is new technology, and Bitcoin and the Bank of England's NFT and all this, noise. And then on the other hand, you've got the Bank of England and the FCA that absolutely loathe Bitcoin. They make it really difficult to buy. They really make it really difficult to send money to exchanges. They've banned all the derivatives in SIPs and in mainstream markets, so ordinary investors can't get exposure via SIPs and ISAs and things. And there's just a total incoherence between the two departments, and you wonder if they even speak, or are they able to set policy independently of each other, because it's just totally contradictory. And that's my rant over.
Would you want my rant?
Yes.
I launched a bold ETF, Bitcoin and gold ETF.
Yeah.
In April in Switzerland, because I couldn't launch one here.
Mm-hmm.
And you can't buy it in Britain. It's virtually impossible. Even if you're a financial professional, you still can't buy it at most private banks. They've blocked it. and there's no legal reason for them to do that. There's just sort of anti-crypto culture. And, it's very frustrating that my product is less risky than any equity index you care to mention, even global quality. The lower drawdowns, similar volatility to the least risky equity indices, and lower drawdown over the last 5 years at any point. It's bad.
But that kind of fact is irrelevant when, there is I mean, even gold took 20 years before it had sort of financial acceptance. I remember in the noughties, everyone said gold is risky, and you're like, really?
People talked about gold and silver as if they were Bitcoin and Ethereum back in those days.
I know.
And
anyway,
they're still not really accepted.
Yeah.
They're alternative assets. The traditional view, if they haven't got a yield, then you can't possibly value it. Well, I just think, if you can't value it, then use your imagination, is my view. Now, we're just going to finally finish on the scores.
Yep.
And the scores. So, I wake up in the morning and have a cup of coffee and these sorts of things. And then I look at this. I go, what's improved overnight? Where are the changes? And I think, wow. Okay, coin, it's popped up. Near's been a dog for a while. That's gone back to 1 star. So that's in Ethereum. Let's put it back into Bitcoin. That's a bit simpler to understand.
Should we put it in US dollars, or should we put it in Bitcoin?
You could put it in dollars, but I think you got to get into your head in the space. If you're going
to see Shiba Inu's had an up day.
Yeah.
I don't like. I mean, I find these meme coins. I think they're really funny, and they are good fun. But crikey, somebody somewhere's making a great deal of money out of them, and somebody's losing a great deal of money.
Yeah.
A friend of mine bought, I forget how much it was. It was like 1,000 quid's worth of Shiba Inu or something. And his investment went down after 2 weeks, and he was like 300 quid down or something. So he sold out and took the loss. And then it went on that colossal run. And he calculated that if he'd held on and sold at the top, he'd be a billionaire. Instead, he took a 300 quid loss.
There you go. There you have it. So we've got the upgrades. What's really interesting here? The FTX.
Did it be Bitcoin SV up one? Whoa.
Oh, Bitcoin SV up one.
Yeah.
Crikey. Did the High Court say he was Satoshi or wasn't? We only got a quid for it. But if you are Satoshi,
but it's not over. There's still another episode in that story to go.
Yeah.
But it's still very funny to award McCormack a £1 penalty.
Well done, Pete McCormack, on all that.
Yeah.
So Ethereum's they're already 5 stars, but we've got synthetics. As it happens, the ByteTree analyst right now is writing up a synthetics publication. It's either this Thursday.
What does synthetics even do?
Well, it's got a lovely trend, and it's a good protocol. We think it might be pretty good. So, but it triggers you to ask the question. And
I don't even know what it is.
Underperforming.
Yeah, it looks good. Can you put it in dollars?
Yeah, I can. Let's just have a quick look at all time in Bitcoin first, and then I'll just.
Presumably, it's beating. I bet you it's beating Ethereum as well.
Yeah, it might be. But that's a lovely chart, isn't it? Down from 6. And there's your turn. So a classic sort of. Never use the phrase low risk, but much lower risk entry point than any other time in recent history. So we've got synthetics in US dollars now, which probably won't be nearly as exciting, and they never are. But we need to wait for the whole market to.
So it's gone from what, $3 to $5 or something in the last.
Well, we're now in dollars. So it was $15, wasn't it?
Just show us the last 3 months. Okay, so it's gone from a low of just below $2 in June up to about $4 now.
Yeah.
Oh no, just below $1. So it's up. It's quadrupled since June. That's better than my portfolio.
You're on the right-hand side, don't forget. The left-hand side is the school.
Yeah. I'm looking at the right-hand side. It's like $3.
The low was at 156.
Yeah.
And yesterday's close was 371.
Okay, so it's tripled. It's doubled in a bit.
Yeah. From the capitulative low. Yeah. So the meme coins, as you mentioned, I mean, they are sort of quite amusing, really, aren't they? Mm-hmm. But Dominic, tell me about ByteTrend. So I've shown you ByteTrend. Tell me what you think of it and how you can prove it. Would you use it, and so forth?
Yeah, I would, Charlie. The problem is people are lazy. I'm lazy, and I've got my, you know, whatever it is, coin market cap, which I occasionally go to when I'm looking at prices. I don't actually really trade that much between coins. You know, I've got my little portfolios, things that I use to look at stuff, you know, stock charts and so on. But this is a really good, if I can get myself into the habit of logging into here every morning, and then, you know, maybe, I don't know, when required, I guess once a fortnight or something, switching between coins, I think there's a really good system here.
Yeah, so that's what we do in Byte. We keep everyone up to date on Mondays. And would you be interested in an email that gave you automatic output?
Yes.
Yeah. And would you, and you daily, weekly, monthly, yearly? When do you want it?
I think weekly.
Weekly. Yeah. Okay.
And I don't think sending it over the weekend is a bad idea, because I think a lot of people do their research at the weekend.
Yeah.
They've just got a bit more time.
Yeah. No, good point.
To think about stuff. And,
I mean, so the
and
point
you've got to make it a bit sexy.
Yeah.
You know, these are these week's winners. These are next week's winners. That kind of thing. It's good to see cheer up there. The company I used to work for had a lot of cheer. I was CEO of a company called, oh no, but it's only up. It's only on a score of 2.
In dollars?
Yeah. In dollars, yeah.
So
anyway, I worked for a company called Cypherpunk Holdings. I was CEO. I've still got a lot of shares, but they had a lot of cheer at one point.
Yeah. Well, there you go. You know, it's sort of.
Yeah. It's all right. That's pretty good.
Could be worse. So this is not real-time data. We use closing prices. The point of this exercise is to analyze the space technically, and we're not doing tea leaves. We're not sort of looking at patterns and you know, referring to Japanese textbooks, historic textbooks. We are literally measuring trends on a consistent basis, and we're doing it in different denominators, dollar, Bitcoin, and so forth. Now, before I let you go, I'm just going to show you what we're working on at the moment. This is not finished, but this is we've got 300 ETFs in here, European ETFs, all dollar-based. And just for fun, you can measure them in relative to the Bold Index, the ByteTree Bold Index, which is 80% gold and 20% Bitcoin. We're adding dollars and other measurements, but they're not quite ready yet. So is there an ETF that interests you, or a theme, or a part of the world? I can tell you for free.
Compare them to the FANGs.
Right. So the most of the world is the sort of US
or the NASDAQ. Can you compare it to the NASDAQ?
Yeah, we'll find something NASDAQ-y. Something techy. So I haven't prepared this. I should have prepared this, then I wouldn't be doing that.
I'll go and compare it to SPOG, the oil and gas shares.
Okay, we just saw that, didn't we?
Yeah.
Where's
down there. IOG, yeah.
Yeah. So would you rather own Bold or SPOG? And obviously it's 5
probably
stars,
at the moment I'm going to say SPOG, but I don't know.
Well, unless you think oil's peaked for the time being. So that looks that looks really good, doesn't it? That looks like oil and gas is strongly outperforming Bold at the moment. It's been one of the best trends out there, but of course it hasn't always been that good.
No, I actually sold all my SPOG about 2 or 3 weeks ago. I'm now beginning to regret it because it looks like it's coming back. But
so that's relative to, so that's the oil price relative to Bold Index, and of course Bold's been really strong these last few years.
So that's amazing. So it's oil and gas. So that's unfair. So let me compare it to something that's been crap. NASDAQ.
Let me show you what's been properly crap. So all the leaderships I said has been there you go, S&P IT sector, that'll do. Yeah, that's basically the NASDAQ. And this has started to outperform very recently. But I don't think it's going to last. And if you look at it over the last over a bit more time, then IT really hasn't been quite as impressive.
Yeah, because I guess with Bold you've got your little bit of Bitcoin that gives you your sort of NASDAQ.
The whole point of Bold, Dominic, is you've got the same amount of risk in each asset, right? So the same amount of money in each asset is 50-50. The same amount of risk is 80-20. And
yeah.
And so if you've got 20% in Bitcoin and Bitcoin goes to 0, what's the most you can lose? 20.
Yeah.
And it doesn't go to 0. It goes down by half. So you can lose 10. So a big drawdown for Bold is 10, because gold doesn't tend to do very much. and in the good times,
No.
Bitcoin goes through the roof. So actually, the IT sector and gold have been mean reverting for the last 2.5 years. Yeah, but that's going to show
that's
you
interesting.
all the weak trends. And so you've got China, you've got emerging. Let's look at emerging markets.
Russia. Should we be buying Russia? The JP Morgan Russia Trust has doubled in the last month, by the way.
Yeah, well, they're committed, aren't they?
I don't know. Somebody sent me a thing on Twitter yesterday, and I just glanced at it.
Well, the ETFs all got wound up on some sort of drawdown mode where I didn't quite understand what happens. Do you get paid as they manage to liquidate the assets? I think after Putin's dead, probably. But then the JRS will just hang in there. So that's, you know, the emerging markets there have just been consistently underperforming the gold index over the last couple of years.
2 years,
and the final bit, and we'll do gold again another time when we've built more here.
Yeah,
it's just quite fun. So
that's interesting.
We've got the breadth chart in bold, 300 ETFs in the world relative to bold. And you know, when there's lots of red, bold's winning because the ETFs are doing badly. When there's lots of blue, then the ETFs are doing well and bold's doing badly. Actually, bold's not doing badly at all. It's turned up, but the US equities have had some sort of spike.
They're outperforming.
And this is
when bold's doing bad, it basically just means there's opportunity cost.
With bold's doing badly, it just means that there's the nutters are in the market.
Okay, you know, risk is on.
Right. Risk is on, yeah. And so when do you buy bold? You buy on the blue spikes, don't you, Dominic?
Yeah, which would be now.
You do. You see that blue spike and you go, my God, bold's not doing very well against the universe. The universe must have overdone it. Sell the universe, buy bold. Absolutely. And if we zoom in, we can see the red skies returning, and we like the red skies returning and the blue soft.
Yeah. Gotcha.
So there you go. Bold one index. We love it. So, ladies and gentlemen, thank you very much for listening. And thank you to my dear friend, Dominic Frisby. And you're going to Edinburgh, aren't you?
I am. Day after tomorrow. Yeah.
Tell us what you're up to.
I'm doing a show about the history of weights and measures. There's no technical analysis in it, but there should be, because technical analysis is another form of measurement. And but it's a very interesting show, and it's a fascinating and quite polemical history.
No, because your daylight robbery book, you're brilliant at bringing all these things together and framing history and how we got to where we were. And you've done it in all your books. I'm a big fan. But the what you're doing with weights and measures is hilarious because, you know, as far as I understand it, the metric system came along because every industry had its own weights and measures. Fishing had a different way of doing it from the horse people, from the scientists and so forth, didn't they?
Yeah, I mean, but
together.
Every leader since forever has been trying to standardize weights and measures. They've, like, if you look at Magna Carta, let there be one measure for ale, one measure for corn. You know, even the first words of the Bible were standardizing time. And in revolutionary France, there was something like 250,000 different measures. It was every town, every village had its own system of weights and measures. And, you know, every industry had its own weights and measures. And so the French revolutionaries called out for one king, one law, one weight, one measure. And that's how we got metric. Instead of making measurements around the human body and the world around us, they decided to make measurements a universal measurement scheme based on the dimensions of the earth. And 1 meter would be 1/10,000,000th of the distance from the North Pole to the equator. But of course, these grand designs ran into quite a few problems. And the guys who were chosen to measure, they couldn't get to the North Pole or to the equator. So they measured it from Dunkirk to Barcelona instead.
Once you're in the North Pole, your hands are a bit cold to make detailed.
Well, exactly. And then there were two guys. One came from the north and headed south, and the other went from Barcelona and headed north. And the guy who was in Barcelona, he got arrested for sorcery. Then he got arrested for being a spy. And then the money he was given was the French assignat that suffered hyperinflation. So he ran out of money. And so he ended up fudging the data. And but this standard of unit, it's only been uncovered like quite recently that he fudged the data. So the metric measurement, the meter, and ever since they've redefined it, since it's based on atomic speed and the speed of light and whatever, but they've always redefined it around the existing meter, which is a fraudulent measure. It's very funny. And do you know how much it was out by?
No.
It was out by a tiny amount, 0.2 of a millimeter, which is, do you know how much? A hair's breadth.
Brilliant.
Which is an old traditional measure. And if I go to you 0.2 of a millimeter, it doesn't mean anything. But if you go a hair's breadth, you know exactly how much it is. It's funny, isn't it?
It is funny. And what we've done here at ByteTrend, Dominic, is weights and measures. We've given weights and measures to charts. We've got a framework that we can put on any chart.
Mm-hmm.
It's just going to grow. We're going to do more ETFs. We're going to do macro. We're going to do lots of stuff. It's going to be a lot of fun.
Yeah, but if you want it to be widely accepted, you have to make it metric.
How do you make a chart?
You have to decimalize it.
You have to put.
I don't know. It's obsessed with decimals.
You have to do a chart in a French accent.
Yeah, something like that.
Dominic, thank you very much for joining us.
No, not at all. Cheers, Charlie.